Hello everyone, my name is Lawrence and thank you so much for watching my channel, a channel that talks about investing in the stock market and also talks about financial independence. If you haven't considered subscribing, please consider subscribing such that you don't miss other videos of mine. As you might be aware, and if you're following global trends, if you're following news, you're aware that globally the stock market is down. We are in a bear market, call it recession at the moment. And recently actually I shared a video that talked about what you should do when the stock market go down or when there is a volatility in the stock market. First of all, there are two things you have to do. One is to be patient and not to panic. Second thing is you have to start buying stocks, because stocks at the moment they are cheap. So what I'm going to be talking about are my top 3 companies that I'm currently buying because I consider them to be very cheap at the moment. Actually, it's a disclaimer before I go ahead. This is my personal view, therefore you should also do your own research. You should do due diligence before investing, because what I'm sharing is my personal opinion, so you shouldn't follow it in any way. Just to share my point of view, that's it. If you're interested, you can also follow it up. You can also do your own research and also invest with informed decision, not following any person's advice. So with that, let's straight go to the fundamentals and also statistics to back my point of view. Let us start. The 3 companies that I'm going to be talking about today are mostly, because as I said before, I follow banking stocks, and to me they are the most lucrative banks, companies, and also I understand them more than other companies. Number 1 bank that I'm currently buying is Kenya Commercial Bank. Second bank is Absa, Kenya. Third bank that I'm buying also is Operative Bank, Kenya. All the companies I'm talking about are based in Kenya on Nairobi Securities Exchange. So let us go directly into the fundamentals. Let's go. Yeah, this is my trading account. As you can see, let me go to statement. I'll go to statement and I show you what I've been able to, some of the stocks that I've been able to buy throughout this recession. Actually, I've been buying since March, so I've been averaging down as the stock market goes down. For me, I've been following it up. This is my, as you can see, I've been buying actually since Feb until, anyway, I'll buy as long as the stock market keeps going down. And if you can see, I have more shares. I've bought more shares of Absa. I've bought more shares of Cooperative. I've bought more shares of also of KCB. So basically I've bought other companies, but basically I'm just going to, for today's discussion, I'm going to talk about mainly the 3 banks as I talked about. That's Absa, Cooperative Bank, and also KCB Bank. So let us start the fundamentals. Let us start with Cooperative Bank. The price, by the time I was recording this video, it was 12.9, and its current price to earnings ratio is 5.2, which is below actually the industry PE average of 7, and also the dividend yield is slightly below the other 2 banks, but it's also very promising. The dividend yield is 7.7%, and its price to book value is 0.995. Actually, if the price to book value is below 1, in Rayman language you can say it's slightly undervalued. And also if you go to debt levels, Currently it shows it has no short-term debts, which is very, very good. And also if you go to long-term debts, it has 26 billion in long-term debts, which is not threatening compared to the size of the company. And also if you go to payout ratio, it pays 41% of its earnings. It's very, very good because it means 59% of the remaining profits it can use it for development and other investments. So this is very good. Looking on its balance sheet, it is promising, and also it can successfully be able to go through this recession successfully. That is one. Second bank that I'm currently buying is Absa Kenya. By the time I was recording, its price was 9.9 and its price to earnings ratio is 6, which is also below the industry PE average of 7, though it is slightly above Cooperative Bank. So when you go to the dividend yield, it is the highest in the banking industry of 11.1%, which is actually very, very promising because you rarely get such kind of dividend yield in banking stocks. So when you go to price to book ratio, it's 1.2, which is slightly above 1, meaning in layman language you can say it's overvalued, but it's understandable because I believe the investors who are buying Absa Bank, they are pricing in its dividend yield being the highest in the industry. When you go to debt, it shows that it has no debts, which is very, very good. And also when you go to its payout ratio, it's a bit concerning because it pays its profits of over 75%. So meaning it only remains with 25% of its earnings, which it can use for development and also investments. So compared to the Operative Bank, when you go to the payout ratio is slightly higher, it means Cooperative Bank has more room for development compared to Absa. But also the good thing about Absa is that it has no debts, so it's also very strong. It is also favorable. It will go through this recession very successfully since it has no debts. Another one and the final bank that I'm currently buying is Kenya Commercial Bank, or in simple terms KCB. By the time I was recording, its current price was 34.6 and its price to earnings ratio is 4.27, which is way far below the industry average of 7. And also its dividend yield, it's very, very good also, of 10.12, which is also very interesting compared to the size and the strength of the bank. So when you go to its price to book value, it's 0.82, which is slightly below 1, meaning in layman language it means it's undervalued. So when you go to also payout ratio, it's also very promising of it's 43%, meaning that actually on its profits or earnings it makes, it only pays 43% to its shareholders, meaning it has 57% of the rest of the earnings in investments and also developments. As you may be aware, it was able to also recently buy National Bank of Kenya because it had a lot of money. That's the importance of having a lot of money and also paying raise to its shareholders, because it preserves the money to do other development projects. So when you go to the borrowings, they are not concerning that much, because if you go to short-term borrowing, it's short-term borrowing, it indicates it only has 4.5 billion, which is not bad compared to the size of KCB Bank. And also long-term borrowing, it's 21 billion, which is also not bad compared to the compared to the size of the bank. So those are the three banking stocks that I'm currently buying. And also, as I have talked over the time, there is no single important ratio that you have to take into consideration. The most important thing is combining all the fundamental analyzing ratios. You combine them. Another thing to remember most of the time, debt during this recession is one of the most important thing to consider, because if the company has more debts, it is more likely to go bankrupt, because now the business are low, it has to use its current cash to maintain its operations. So during this recession, you have to check the debt levels of any stock, of any company that you are considering to buy. So those were my analyses. Please, as I said before, take care or do your own personal analysis before considering to buy, because this is my personal opinion. You may also have your own opinion. Thank you. I hope you enjoyed also the fundamentals of the stocks. So I'm sure you have learned one or two to three things. Also, maybe you'll consider looking at them when trying to start investing. Once again, as I said, I'm not a financial advisor or stockbroker. So if you're considering to buy, please make your own research before you make a final conclusion. Once again, thank you for watching. Have a good day. Bye bye.